Good morning, traders. It's Monday, 8:01 a.m. Chicago time, the 5th of October, 2015. I'll try not to speak loudly so as not to wake up the bears today. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Overnight news, pretty light. Um, Not much really to report other than the fact that there's a continuation rally from Friday based on U.S. markets that carried over into the European markets. Also, weak PMI have continued to push the markets higher during the European session as there's more talk of stimulus, and of course, there's no action expected by the Fed given the poor uh, non-farm payrolls numbers on Friday. Europe's having its biggest two-day rally in a month. The Euro stocks are up 3.48%. FDAX is up 2.96%. Looks like the CAC 40 is up 3.24% and FTSE up 2.12%. Those are big up days so far, and so it's uh, we're opening in a gap, and we'll look at that in a minute. As far as what's ahead of us today, we're looking at services PMI final at 8:45 Central, 9:45 Eastern. Let me just say that all times are Central exchange time, so it's Eastern time minus 1 hour. Services PMI is expected at 55.6, and then at 9 o'clock Central, we're looking for ISM non-manufacturing at 57.5, and then looking at the calendar, not much. There's a Eurogroup meeting that just started in Luxembourg, and there's a press release at looks like 11 or so Central. Other than that, just the usual 3-month, 6-month bill auctions at 10:30. Let's take a look at the technical side of things. So Friday was a big day. Friday was a benchmark day. Um, this is what you're looking at here. For every bar, and it seems like there's a lot going on here, but for every bar, we're looking at the regular trading hours or the day session hours for the entire day. So each one of these bars represents a day of trading during pit hours, which are 8:30 Central till 3:15 Central. What the market has done is it's dropped at the end of August. It dropped through to the low that was put in on the 24th of August at 1821.75. It has pulled back about 50% for a high of 81.75. It has attempted lower to 89.50, 1889.50, and has basically gone sideways with a pop to 2111.75, which failed all the way back to 1861. Note the difference between 1821.75 and 1861.50 is 40 points in the futures. In the cash, it's much, much smaller. The cash almost got to their low, and that was what was expected. We expected a drop, a pop, and then a continuation down into the 1800s. The low represented here on the 24th of August is the key high volume node on the composite. It's around 19 and a quarter, 20, and the market has popped up from there. It's always tricky to short in these markets because there's just a ton of incentive to keep pushing higher, and also the overall trend when we zoom out and look at what the market has done, and I'll do that on the SPX chart in a minute. The trend is firmly up. The short term, the intermediate term trend is balanced or sideways. The very short term trend is up, but the overall trend is also up. So Friday, take note of the fact that we traded 1.96 million contracts as listed down here. 1.96 million right there. And you could see that the last week we had a fair amount of volume coming through. Expiration was the week before, And so this is pretty legitimate. The range we had on Friday was very large, 60.75. Right here is the normal range, the blue area. That's the normal range going back to October 1st of 2013. The normal range, let me shift this over, is the high end of the normal range is 21 and a quarter. The most common range in the area is about 9 to 10 points per day. The second sigma, or the second standard deviation, which is 95.45% of all the days, if we look at the limit of those, we get 40 points. 40 points is a second standard deviation. And so what we had on Friday is a 3 sigma plus, meaning it only occurs about 0.3% of the time, or of the data set. So big day. So we have large up volume, large up range, large up volume, and it's just it's a clear sign that higher time frames are in control. We're in control later in the day, and that the market is has found its buyers. So, excuse me, that's the overall scene of what has happened. Oh, by the way, if you look at the, let's zoom out here or zoom in. If we look at what has happened, you'll notice that Friday started at that big 1892 level we've been talking about, 1890-92 level that we've been talking about. It attempted to go lower, and then it just took off from there. So when we look at the profile here, we see that it's gone from a composite LVN. It paused at the composite HVN at 1902 or so, and then it paused again at the composite LVN at 1918, and has pushed through to the 23. We paused here. I'll show you that in a minute. We paused, pulled back, and pushed right through, and it went to the next LVN. And now we are dead center on the high volume node that's coming next. So this is an auction. This is a multiple day auction occurring all in one shot. Again, more evidence that the higher time frames in control. So overall, what we see here is essentially the market normally would test below the LVN, chop around, fill that up a little bit, and then get to the high volume node right here, and then basically get a reaction, push through, pull back to it, and then get to the other side, and that completes one auction, right? We've gone from a rejected price, low volume, to the most accepted price, high volume, to the next rejected price or low volume node area. And if you go back in time, you'll see that that area had um, tops or opens and closes, and just rejection areas. There's no volume here. The beautiful thing about volume profiling is it's irrelevant of time. So this profile will look like this on a daily, will look like that on a 60, 120 minute, doesn't matter. It's basically volume up price regardless. And so what this has done, though, is it has taken the LVN, pushed through to 1923, and pushed all the way to the next auction. So on Friday, we basically auctioned this accepted area, and we've auctioned through this accepted area, and now we are testing this accepted area, this area of acceptance, which makes up these 2 days right here. So that's fairly significant. We have an area below us that has not been tested yet, and we'll see what the fate of that area will be when the market turns over. That becomes the key area to test. That's the 1874 area I mentioned before, 74.50. So there was a lot done on Friday. That's the point. There was a lot done on Friday on really good volume and with very wide range. So this is a pretty threatening condition for shorts. Shorts might want to consider hedging their position with options, or closing them, or whatever your risk plan says. On Friday, On Friday, we're looking for so Friday's non-farm payrolls release, and I don't know why my non-farm levels are not on here. That's kind of odd. I put them on here. Oh, hang on. There. Yeah, it's kind of strange. The non-farm numbers are the old ones. Okay. Friday, we opened right on the edge of the range. The expectation is it would push into the prior day's range, be responsive. If you recall on Friday, right after the number, I had a trader bite, and I said that the structure that the non-farm payrolls release left behind was very weak, and that it's very likely to go back up and retest it over the next day to several days, and it did it. It did it on the same day. So you could see here, there's the non-farm payrolls number release. I can't draw, um, and it just did not trade anything really of substance through this whole area, and it left basically a very weak structure back into that 1912, 1913 area. And the scene of the crime is up here at 28. And so the expectation was for it to retrace that at some point soon, since it didn't quite, there was just really not much volume uh, on the drop. Volume came in after the drop, but not much came in on the drop. But in any case, what was expected is that we would test lower and then push back in, see some resistance up into the 98 quarter, 99 area, and then get back into this 1907.50. But I didn't mention it, but the main target was 1923, which is a composite point of control. And most of the morning was spent looking like it was going to roll over down into the 1874.50, which is another hypothesis. And then essentially once it got into, and I'm being asked in a chat room, once where would I have changed my mind about the sell side once it pushes through into the prior day's range, and if it retests, is not able to get out of the prior day's range, that is a huge contextual signal there. And what it did is it pulled back to the mid, and then you had a high rotation, and there was the up rotations were much higher than the down rotations. So you could see that we got 12 points there, 7 points there, 5.75 points there, 6.5 points there, and on and on. You could see those rotations lined up. The up rotations are much larger than the down rotations. I would have given up on the short side once it was unable to rotate back down into the mid again. Then I would have let go of the short side. In fact, I had a short trade in here, which I had to manage early on, and actually managed to just pull a tick out of or something. Um, uh, After adding a couple times, and it just there was no relief on that trade at all. It ended up pushing back down to 97.50, which allowed me to take a tick on it. But it was clear that this was not being won by the sellers. I was on the wrong side of the fight. So a test of 1907.50 to the tick, a beautiful rotation down from there, 7 points, 7.5 points down. And then from there, it's just the prior day's high, another 6.75 point rotation, and then it breaks through into the 1923.50, and then another rotation, and then from there, it just kind of just had a blow off push into the close. So the way this is configured right here, it shows us that the auction is incomplete. This rally was incomplete despite the range that it traded in. This was a very strong short squeeze right here, and it went right into the close at the high. The point of control did not shift because we traded a fair amount below. So you can see we traded enough below not to shift the point of control. The point of control was expected to shift up here, and then essentially, if we had time, it would have shifted up to the high of the day. But overall, weak high close, close on strength, um, a trend day type. The profile had multiple distributions, the market telling us that it could not find consensus on value or balance. And so we expect today to continue higher, and it did. The overnight session pushing to 1959 and a quarter. 1959 and a quarter ties in well with this 19 with this high volume node that's left behind up here. And also we have a point of control with these 2 days here that is at around 57 or so, and so overall the market has done what was expected on the um, on the push higher, but overall it's there's a lot of strength here. Here's the 1957 right up here, and has pushed to 59 and a quarter. So let's take a quick look on the overnight session and see what that's telling us. The overnight session, no sellers at all. It had a very small pullback right on the open yesterday, but once the Chinese market or the Asian markets kicked in, it was balanced, and then it started to ride up with the European PMI releases in the European market. And so overall, we have another P-shaped profile with the point of control at the high, weak high at 59 and a quarter, very vulnerable. I'm going to be watching for this 1950 area to see how the market reacts to 1950, and then if it takes out the 1950, it's likely to retest Friday's high. So the hypothesis for today is it's likely to push the high early on, push into the 63.50. I'm expecting a responsive seller, likely to fail ahead of the 43.75 and chop around, and then look for, because the trend is your friend, look for a continuation of this trend from Friday. We are pushing again. We're pushing into a fairly sizable balance area up here. So I expect it to get stuck here a little bit on the day session, but we'll see what the bigger participants want with this. Very, very healthy delta on Friday. Very healthy. Anything above 40K on a rally day, negative 44K on a sell day is very, very strong delta. Delta is the measure of, this is not an option Greek delta. This is the difference between those folks who are buying on the offer, in other words, reaching for market and aggressively buying, minus the number of contracts who are selling on the bid, and the difference between those two numbers in tick data. This is all built on tick data. The difference between those two numbers is this number here. 76 is very high for a delta. So there's a lot of strength here. I would not fade this strength. So normally I would say, yep, look for, responsive selling right away, some basing, and then potentially a push higher. Here it looks very much like we're likely to pop up higher. And if it does find sellers up in the 63 area because of this high volume node up here, then it's likely to do so after the overnight high. And then I'm not looking to ride the shorts very much. That's the primary hypothesis. I want to go over a couple things. I know I'm running out of time here, but there's a lot going on. I want to show you the weekly profile, some important things to look at here. So these are weekly profiles. Each one of these represents a week. This is last week's. One of the good things about this is you can break this up. So when you break up the profile, you can see what each day did: Monday, Tuesday, Wednesday, Thursday, Friday. And you could see how far we got. We got into the gap close here that we left behind the week before. Once we break up the week before, you can see more clearly what the market has done. So we have a standalone day, right? We gap down and we have 2 days of balance. And then we had a recovery day, which ended up balancing back down, forming this high volume node that we were basically stuck in Friday once we pushed through. And then on yet last week we have sellers dominating from the beginning, and then we have a balanced day on the selling. Then we gap up and we have a 2 days of balance, and then non-farm payroll comes in, opens below the 2 days of balance and crosses that whole area, which is not normal. It's not usual for it to do that. So that's hence the loss on Friday. But overall, breaking this up and toggling it back into a contiguous a profile is very useful in seeing how was this formed. So if we look at the week before, which is what we're going to start templating. So once today gets above here, we start to look at this next distribution here, and how is that distribution built? It's built on these 2 days right here, and how did those 2 days trade? So you can see a lot of disturbance in these 2 days. This is the FOMC. And so you need to go back, and we call that a template day. This would be a template day, the day that we look back to see what happened in that auction to form the profile becomes a template day. And it's a very important thing to go back as part of your homework and see, okay, where are we? What happened the last time we were here? And look at that day's highs and lows and just traditional support and resistance areas. So I just wanted to show you that. We are working our way back up into the prior week, but we have not taken out the prior week. We still have a fair amount of resistance higher. We still have a balance here that the market still needs to take out, but it's a 1 day balance. And so that's important to see. The last thing I wanted to show you before you run off is our SPX chart. So this is the SPX, this is the cash, the underlying instrument for the ES. And you can see we broke out of this ascending wedge here. We broke lower, which was very bearish, but then we broke higher on Thursday, Friday. We broke out of that trend down, this channel down, and are pushing higher. There's still a fair amount of resistance up top, so we're pushing into the resistance up here. So don't get carried away on the buy side either. I think there's going to be a two-way battle. You can see that the put-call ratio has dropped. The 52-week lows making new highs has dropped. The 52-week highs making new highs is steady because we have a ways to go before we start seeing new 52-week highs. So overall, the market is in a neutral with the buyers in control. So I'll leave you with that. I know I went long here, but I wanted to give you that. One last thing. I heard a comment that somehow all my predictions are correct, and I'm always highlighting the side that works. And that's not true. The fact is, I lose just as much as everybody, but every time a hypo doesn't work, it's a loss because I have to play a hypo until it does not work. And when it doesn't work, it's generally a loss for me. So if I expect balance on the day and it breaks out like it did on Friday, that's a loss. So I'm pointing out what's working because I'm pointing out what the probabilities say and how the probabilities work out. So a lot of times I'll say hypo 1 is for it to drop to 74.50 and it ends up tearing up. That doesn't mean that I waited for it to tear up because somehow I have a crystal ball that says it's going to push up and I was long. No, it cost me something to be wrong, and I'm wrong every day. It's just the difference is that I don't sit here and defend or add to or protect a terrible position. Once the market changes context, I change my mind and I go with what the context says, period. This is not a good business to be stubborn, folks. So defending a position just because I said, oh, this is what it's likely to do, that's not the point. This is why I cover multiple scenarios. I'm open to whatever works. As I said, I'm always trying to find out, I'm always looking to find out who's winning the fight, and then I'll abandon the side that's losing and try to get on the side that's doing the work, that's gaining ground. Okay, so don't be disillusioned by the fact that I'm pointing out what it's doing. That does not mean that I'm not taking losses. It is part of the game to lose. For anybody to tell you that they're not losing is in this business, it's just I can't say it's impossible, but it's extremely extraordinary, not likely. the probabilities do not support this. If you have any questions or anything, just reach out to my website, hit the contact button, and get a hold of me. Good talking to you. Take care.